Hello investors and traders, today I'll speak about 3 dividend stocks, a great dividend stocks to buy right now. So let's start with the first company for today. It's Abbvie with the ticker Abbvie. Now we see on the chart that its performance since the beginning of the year, the stock is down 6%. The technical analysis telling us that the stock now is oversold, the momentum indicator RSI, and also it's traded in the decreasing channel, increasing, so now it's traded the lower border of this channel, so I'm expecting to see the stock a little bit higher towards the end of this year. By the way, the dividend yield now is 4%, and of course let's have a look on the fundamental parameters of this company. We see a market cap of 167 billion bucks, dividend yield 3.9%, 50 kilo employees the company has already engaged in its operational activity. The P ratio now 35, and PS price per revenue per share is about 4. So generally speaking, the those two valuations are very close to the average value. So here I can tell that it's expensive for cheap, but for me it's quite good valuation. Let's have a look on the company performance. So we see that the revenue for the last last 5 years are continue to grow. The marginality for me impressive. Look, net income margin of 20% and gross 72, so it's really very high marginality. By the way, this company Abbvie, of course, it's research-based biopharmaceutical company which engaged in the development and sale of pharmaceutical products. So most of its revenue, the company of course receive in a knowledge sector, and in the US the company earns 78% from its total revenue. Let's have a look on the history of Abbvie dividends. So dividend yield 3.9%, the dividend increase track record 51%, so it's dividend king of front of us. The annualized 3-year growth rate is about 9%. So the next dividend payment will be in the 15th of May. So dividend king, quite nice dividend yield. So it's the first, it's nice, and the first stock to buy today. Also, we may see that here for the last 3 years the company decreasing in level of debt. It was 87 billion bucks. Now for the last year it's count 64 billion bucks. We are now in environment of high interest rates. The Fed fund rate is now 5%, expected to be elevated by a 1/4% on the next week. So of course it's great. Actually, we may check here the debt amount for the last quarter. Last week the company showed us its quarterly report. So here we may see the amount of total debt. Yeah, it's actually decreasing. We see it was 80, 73, 78, and yes, for the last quarter, the last figure we have is 64 billion bucks. So of course it's decreasing, and it's a great information and a great data for the dividend investors and shareholders of this company, because the debt amount decreased, so the company so as interest expenses of course will pay less and less interest. Let's have a look on the second company for today. It's Abbvie, Well-Being Green Bulls Alliance. So it's a healthcare company. It has a drugstore chains. Its assets. So here the technical analysis, as I see, it was an impulse. It was a correction, the first and the second, the third, the fourth and the fifth. Now most probably fifth wave finished here. Actually it's a range, and now it traded in the lower border of this range, so that's why I'm expecting to see another Another good opportunity to buy the stock. Actually, there is side momentum indicator 41 in the weekly on the weekly basis. So now the stock already oversold, plus the dividend yield now more than 5%. Let's have a look on the fundamental parameters. Market cap 30 billion bucks. The PS ratio is less than 1, so the PS, price per revenue, very low here. So it's a valuation of very cheap for this company. We see last 3 years decreasing marginality, and the revenue of the company for last 5 years actually is very stable. If we will look at the revenue breakdown, so pharmacies give the company 63% of its revenue, and retail business about 26%. Most of its revenue, more than 80%, the company of course earn in the US. So the dividend yield more than 5%. Let's have a look on the company's dividend history. So dividend yield more than 5%. The dividend increase track record 47%. So actually it's dividend aristocrat in front of us. And annual 3-year dividend growth rate is more than 2%. So nice, I guess, nice dividend stock. At least to consider, nice healthcare stock to consider right now. And the last stock for today is Altria Group. It's with the ticker MO. It's a tobacco company. So look here the chart as I see since 2007. It can be no impulse. The first wave, the second, the third, the fourth, and the fifth. The third usually the largest wave in the impulse. Here most probably it's a correctional one. It can be a triangle. The triangle I here expecting to be finished, but then expecting to see the fifth wave, and the fifth wave is usually higher than the third wave, the third one. So the growth potential here is at least 50% up. Please pay attention to the dividend yield. The dividend yield now is very close to 8%, so it's a lot. It's a very great figures. Of course we must check its fundamental parameters because the such high dividend yield it can be dangerous, but we'll check this a little bit later. Market cap 48 billion bucks. The PE ratio 15, so it's like the average of the market. PS 4. It's not cheap, but the marginality, the net income margin is 4. So actually counting this net income marginality, the PS ratio, I can tell you that it's cheap. For such marginality, it could be a 6-7 PS, so it's a good valuation, but now it's 4, so it's as I see, is my opinion, that it's cheap. The revenue of this company continued to be very stable last years, and the marginality, as I told you previously, net income margin 28%, gross margin 88%, so it's very highly marginal business. Actually it's the same like Philip Morris, but a little bit more risky, because here the dividend yield is 8%. It's very high figure. Most of it revenue the company of course make from selling cigarettes, and the whole company revenue it earned in the US. So let's have a look on the company's dividend history. The dividend yield about 8%, dividend increase track record 13%, and the annualized 3-year dividend growth is about 4%. So nice dividend history as for me. Also here I told you that it's very dangerous dividend yield of 8%, but look, the debt to EBITDA ratio is 3, interest coverage is more than 10. Usually interest coverage is supposed to be at least 5. Interest coverage is the operational income of the company divided by its interest payments. So here is quite safe, and look, ultimate Z-score is more than 3, so the probability of default in the future years for this company is very low. Here is in the quite safe area. So in my mind here the debt to EBITDA ratio is quite safe, so it's still not dangerous. Of course it's a little bit risky, but still I guess it's fine. By the way, the revenue of this company expected to show a slight growth in the future years. So generally speaking, in my mind, it can be now relative safe to invest in this company. So it was my view for today: 3 dividend stocks, Abbvie, WBA, and the last one, it was Altria. If you like this video, if you like dividend investing, stock market investing, so of course press the like button, subscribe to my channel, and see you on the next time. Bye.